I am Erik Anderson, Capital Infusion. I am one of the senior advisors here working on SBA loans, real estate, as well as business financing. So SBA loans are actually loans that are backed by the government, the Small Business Administration, just like Fannie and Freddie in mortgages. It is a federally backed program that actually backs up the bank that makes those loans. So it incentivizes those banks across the U.S. to make loans to businesses and drive the economy, increasing revenues as well as building businesses for American business owners. SBA loans can be used for many, many things. There's actually two primary SBA loans. SBA 7A, that's an unsecured program, no real estate, let's just keep it that way. SBA 504 is actually a real estate based program. So they're going to require some form of collateral, either land, commercial property, something related to the business. SBA 504 rates are a bit lower. Whereas the unsecured side, SBA 7A, it's a much more common one. You're sitting anywhere between 11 to about 13% today, and that adjusts every quarter. So if the Fed funds rate goes down, your loan will adjust down over time. So what has happened recently is actually we had a lot of clients who booked an SBA loan maybe 2, 3, 4 years ago. Interest rates at that time were 2-3% on homes. Interest rates increased broadly across the board the last few years. Now many of those clients are looking to try to refinance out of those loans, are looking for other options. But as the Fed funds rate begins to come back down, we'll definitely start to see a lot more businesses jumping back in. We'll start to see a lot of relief on people's payments in the SBA program, and I think we're going to see a lot of loans made in 2025 for this program. It's a multi-step process for the SBA loan. It starts out with a questionnaire. It's simply, 5-10 minutes, essentially asks you, background on your business, your credit, your income, your revenue, all that sort of thing. It actually puts it through an algorithm today that outputs a decision within literally 10 minutes. We know what we're pre-qualified for, what potential programs, then it goes to final underwriting. We start collecting docs. Once we get all the documents in, it actually goes to underwriting. At that point, the bank underwrites it and then sends that full file onto the SBA. The SBA then does their underwrite on it, checks off, yep, we will insure this loan, and then it goes back to the bank. The bank then funds the loan with their own money. So there's a common misconception. People do believe that the SBA gives out money. They do not, unless there is a default, and they never give it out to individuals or to merchants. They actually only back up banks as an insurance policy if an SBA loan goes bad. So it's a common misconception. Government itself, the SBA itself, does not actually issue the loan to the borrower. They are just insuring the loan so that the bank is much more security giving that loan out to a business, right? Incentivizes economic activity, puts money out into businesses that may not otherwise get them if the banks were, not backed up in this way. So there's a lot of industries that benefit from SBA loan. Generally, it's high margin industries right now. It's high interest rate. You're talking 12 to 13%. So that means you have to factor that into your profit margins when you're looking at your calculations for taking money, why you're taking that money, where that money's going, what your use of funds is. We definitely work very closely with our merchants to make sure that this financial plan is viable for you. We don't want you to just take money and over leverage a business and end up just paying debt. The whole point here is we're trying to drive revenue, create more profit for the business. So SBA loans are great right now for high margin businesses. What is that? Primarily right now it's about medical. Does very, very well. We also look at restaurants, anything that has high levels of recurring revenue. Industries that are not doing so well. Trucking, construction. Think why, right? High variable costs. Trucking has fuel costs. They have labor costs. Those fluctuate constantly. So they can't necessarily predict what they might be, even though their contract with Amazon is a set price every month. So in those types of ways, we definitely have our ear to the ground and an unbelievable amount of knowledge to be able to help guide our clients through this process and find the best product for you. Not every loan, not every program is right, depending on your industry, your credit, your time in business, your revenue, all those sorts of things. So we kind of take all that, we wrap it up, and we find the exact program that matches to you. It's very, very personalized. It's one of the very unique things we do here at Capital Infusion. Unlike going to just any major bank or anything, we have a very, very close personal relationship with our merchants, and it allows us to fund them multiple times. I've funded one company this year 3 times on 3 separate SBA 7A loans. So you can have more than one SBA loan as well. Some people ask that. Can I have more? Yes, you can, as long as you can afford it. And in this case, the revenue of the business actually continued to grow. So when they came back for the third SBA loan, took 2 weeks. Very, very quick process. On average, 35 to 45 days for the SBA 7A though. Keep that in mind. So if you need funding quickly, we have other programs. If you found this helpful, share it with a fellow business owner, give us a call, and we'll see you next time. Erik Anderson.